Welcome to Imarticus Learning, where we simplify the stock market for you. Today we are diving into the mysterious world of stock market indices. What are they? How do they work? And why should you care? Stick around and by the end you will be following the Sensex like a pro. Alright, let's start with the basics. What exactly is a stock market index? Think of it as a report card for the stock market. Just like the one you used to get in school, it gives us a quick look at how well a specific group of stocks is performing. A stock market index is basically a group of selected stocks that represent a section of the market. It gives you a snapshot of whether the market is in a good mood or a bad one. Instead of checking every individual stock, you can just look at the index to see how the market is doing overall. It's like when you check the score of a cricket match to know if your team's winning or losing. Same thing here, but with companies like Reliance, Infosys or TCS. Now, in India, we have two superstar indices, the Sensex and the Nifty 50. Let's break them down with some desi flavor. Sensex, which is Bombay Stock Exchange. The Sensex is short for the sensitive index. But don't worry, it's not as emotional as it sounds. It tracks 30 of the biggest and most financially stable companies listed on the Bombay Stock Exchange. Think of it as the IPL of the stock market. It's got all the star players. So when the Sensex goes up, it's like the market is celebrating a 6 from Rohit Sharma. When it falls, well, let's just say it's like a wicket falling in the first over. Nifty 50, which is National Stock Exchange. Next up is the Nifty 50, which tracks the top 50 companies on the National Stock Exchange. The Nifty gives us an even bigger picture covering companies like a wider range of industries. So if the Nifty is going up, it's like an all-rounder in the market playing well in every department. So whether it's Sensex or Nifty, both give us a snapshot of how the market's performing. And trust me, you'll hear these names a lot if you're following the news or investing. Now, how do these indices move up and down? It's all about the stock prices of the companies they track. Each company in the index has a weightage, meaning bigger companies like Reliance or TCS affect the index more than smaller companies. So if the Reliance's stock price jumps, the Sensex is likely to go up too. It's like having one super popular friend in your WhatsApp group. If they are happy, the whole group is buzzing. But if they are down, well, the mood goes down with them. So why should you care about indices like the Sensex or Nifty? Well, they are super important because they give you a quick way to see how the overall market is doing without having to check every single stock. If the Sensex or Nifty is doing well, it usually means the market and economy are in good shape. If they are falling, it might be time to be cautious. And if you invest in mutual funds or ETFs, many of them are based on these indices. So keeping an eye on them can help you track your investments. Think of it like checking the weather forecast. Are we in for a sunshine or a storm? India is not the only place with stock market indices. Across the world, you'll find indices that work just like Sensex and Nifty. Number 1. Dow Jones in the USA. Tracks 30 top companies in the US. It's the Sensex of the American market. Number 2. FTSE 100, which is in UK. Covers the top 100 companies on the London Stock Exchange. Number 3 is Nasdaq Composite, which is again in USA. This one focuses on tech-heavy companies, so when you hear about big names like Apple or Tesla, they are often part of the Nasdaq index. Number 4 is Nikkei 225, which is in Japan. Tracks 225 companies on the Tokyo Stock Exchange. And number 5, we have S&P 500, which is again in USA. Another major US index covering 500 large companies across various sectors. If you want to know how the broader market is doing in the US, this is your go-to. And don't forget, indices are tied to major stock exchanges too. The New York Stock Exchange, where many of the world's largest companies are listed, and Nasdaq, which focuses more on tech and growth companies, are two of the biggest in the US. So whether you are in India watching the Sensex or in the US following the Dow Jones, indices give you a quick view of how the market is performing anywhere in the world. In summary, a stock market index is like a scorecard for the market. It tells you whether the top companies are winning or struggling. In India, the Sensex and Nifty are your go-to guides. And now that you know what they are, you'll understand the headlines a lot better. If you enjoyed this video and learned something new, make sure to give it a thumbs up, subscribe for more simplified finance tips, and drop a comment if you have got any questions. See you in the next one and happy investing, everyone.